Good evening, everybody. All right, hope everybody has worn their nice, heavy winter sweaters tonight. All right, we got the great pleasure of having Todd Gordon with us. Todd is a regular on CNBC, and he's one of the foremost experts in the Fibonacci area. So I guess he had a career as a hedge fund trader and a senior technical analyst way back when. So right now he's going to give us mostly an intro or information on the Fibonacci numbers. So with that, Todd, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Awesome. Thanks, Steve, so much. Appreciate that. And Jim, thanks for having me, guys. Happy Groundhog's Day. I would say the only worst day to be born on is April Fool's Day, which I made that joke. Today is my birthday. My family just left. We did a little birthday thing. I was like, you know, a man can be born on Groundhog's Day. He can, you know, he's probably got some thick skin. And then somebody brought up, one of my clients brought up the point, well, what happens if you're born on April 15th, tax day? I was like, that's true too. So, anyways, we'll have some fun, guys. I've spoken with the Candlestick Forum once before and it went really well. We had a really nice conversation, so looking forward to another one. First thing I'll tell you is, you know, the way we approach Fib, it goes really, really well with the way Steve does the candlesticks. And as you'll see in the presentation, guys, we like to identify, you know, high probability, low risk, decent reward opportunities. I'm a trader. I don't get into the crazy voodoo theoretical aspect of what Fib is and all this. I just use it because it works. I've used it for my short trading career, which has only been about 16 years. I did start out in San Diego, and then I moved back east. So that's me. I'll give you some kind of actionable ways to use Fib, build it into a really nice trading plan, and then I think you'll see at the end how you can tie candlesticks and do it really well. So we'll have some fun. Let me get the chats up, and I'm going to keep an eye on questions. So anything that's relevant to the slide, I'll answer and engage. I try not to get too far off, but I'm not somebody who says hold all your questions to the end. I like to make it interactive and see what you guys are thinking. So go ahead and type them in. If I don't answer, it's probably not entirely applicable to what we're talking about, and maybe I'll hit that one at the end, but otherwise, let it fly. And then what's the other thing? Oh, how many people right now are trading options? I do like to trade the options market. I've traded everything from stocks to Forex to futures, and I started out with stocks and options, and I'm circled back. So who right now is doing options and who is not? So I want to see yes and no, or have and haven't. So just let me get a feel for the room here. Lots of options in there. Okay, pretty evenly split here. Okay, so let me draw the line here and say how many of you guys are using Fib or have used Fib? Yes, no, I know enough to be dangerous. I think it's voodoo. I think it's evil. It's witchcraft. Use it all the time. Okay. About 61.8% of you use it, and 38.2% of you think it's voodoo, dangerous. Good joke, bad joke. All right, let's go. No, seriously, it looks like about 2/3 yes, 1/3 no. So okay, all right, perfect. So let's get in here. I don't use Omnovia that much, so bear with me. I'm gonna kind of struggle through this a little bit, but I think I'll get it. Okay. I just put that picture up. I just changed out, not a new stand-up desk here. I just switched this desk out. I'm trying to do all stand-up desks. Most of us as traders, you know, we don't just sit here during the 6.5 hours a day that the stock market trades. We're kind of on our butt studying and doing a lot of extra stuff. So I'm trying to get all of my desks stand-up, which are now there. This is just a funny picture. My kid jumps on a little balance board that I used to try to stay in shape. So that's the office. It is now redone a little bit. So just a warning, you know, we got to go through this, guys, but I'm a big believer here. Don't trade with money you can't afford to lose. I'm a trader. I've done this my whole professional career. I know that it's a journey, and those of you who are new, kind of going through the school of hard knocks, it can be tough. Those of you who've been through it, you certainly remember going through that. It's difficult. Trading is a boxing match. It's not a sharpshooting. It's not an exercise in sharpshooting. It's a boxing match. You're going to get knocked down on your butt. You've got to get off your butt. Never go for the knockout. Try to go for the decision. Try to win the decision at the end of 12 rounds. That's all you'll ever hear from me about trading. I have too much respect for this business. I've made it my entire career. I'm only into it for 16 or 17 years now. I've got a long way to go, but I take my profession very seriously, and the people that I work with, I kind of demand the same from you. So I'm not a get-rich-quick scheme. I'm not somebody who says, I'm going to show you how to make a 5,000% return on your account. No. I'm going to try to give you an edge, and I'm going to keep you accountable to the edge. So that's all that we're talking about here in trading. So talking about trading, I first started, I was upstate New York. I was a ski racer in college, way upstate New York. Was more focused on trading in my dorm room and training for ski competitions and really studying. I thought school was kind of a waste of time, which it really is. But I was reading Alexander Elder's book. If you remember that red book, Trading for a Living. In fact, I still have it over there on my bookshelf. And as I was flipping through page after page, I kept adding indicator after indicator. And this was in college, actually, at St. Lawrence University in upstate New York. And I got to the point where there's so many indicators I could barely even see the price chart. So I was like, all right. I got to San Diego where I took my first proprietary trading job, and I had like 9 indicators in my charts. And my teacher was like, Todd, what the hell are you doing? Like, take some of this crap off. So I went through the indicator evolution. I started to get rid of everything that didn't work. When I got to trade for a living, I was literally suffering from paralysis by analysis because I had all these signals flapping off on the indicators. Could barely even see price action. My hands were tied. So I had to devolve. I had to get rid of the noise. Fast forward 15 short years later, and this is what you'll see on my charts now. Pretty simple. You'll see some horizontal lines, which are these voodoo fib levels we're talking about. And I do some light Elliott wave analysis, which goes very well with fib. But this course right here, this session, which I'll teach you here tonight, I'm going to give you an actionable trade setup. It's a trend trading pullback. It's going to help you identify zones of support and resistance around which you'll plan your trades. And when you plan your trades, you're going to be light years ahead, okay? It's the minimum effective dose, okay? It's using just enough to be effective, but anything more becomes counterproductive and then ultimately dangerous. We're right in the middle. Steve made a joke about throwing your sweaters on. It's, we're right in the middle of the winter here on the East Coast and the middle part of the country. And the kids are getting sick. They both have colds. So I'm like, all right, to my wife, give me the medicine. I just want to like throw a bunch in them, just whack the cold out. They usually spit up half of the medicine anyways, so just get a whole bunch in there so they probably get it. But if they drink all of it, it's going to obviously be harmful for them. There is a recommended dose on the medicine that's especially applicable to young kids. So you've got to give them the recommended dose. Anything more is dangerous. And I think trading and indicators and methodology is the exact same thing. So if and when we find a winning trade, it should be relatively easy, okay? With our zone of support and resistance using fib, we're going to have actionable trade ideas where we will execute trades. Just on the other side of that fib zone, support or resistance, we will have a protective stop loss. And if we get stopped out, that's fine. We accounted for that hours and days ahead of time. We know right where the stop's going to be, and it's great. And you can see right away, if we're identifying areas of support and resistance using these fib lines, and then you see a candlestick pattern inside of there, that's money. That's exactly where you want to be. Line porn, that's great. All right. So if you don't believe it, those of you who are kind of stuck on indicators, let me just show you an example here. So this is the Qs, okay? We move down into a fib support zone, which I'll be able to teach you probably tonight. Okay, the bar tests the zone. The rule is you buy one tick above the low bar in the zone, so that's a standard fib entry at 104. This one works. Let's pick on MACD here for just a second. Moving average convergence divergence, 12.26.9, which is your default setting on every standard charting package. If you take the default MACD setting, that one's triggering you in at $108, okay? You're giving up from MACD entry, which is a lagging indicator-based movement, versus a signal that's being anticipated or a reversal that's being anticipated. You're giving up $4 worth of profit, okay? 108 to 104. Now, the way I look at this as a trader, and here's a rule of thumb, if you want to talk to a real trader, pay attention to the language. A real trader talks about the risk and the losses they've taken. Guys who are really winning traders, they don't come out and tell you all about the winning trades they have, right? Real traders have been through it through the school of hard knocks, and they're not afraid of their losers. So what I'm saying to you is I don't see $4 of lost profit here. I see $4 of increased risk. By waiting for the market to move that far up, you're taking an extra $4 of risk, which can be catastrophic. So by the time the MACD guys are signaling into the signal, buying in, I'm probably starting to take some profits into their buying. So I think in today's market, you need to be in the market, long, closer to support, and short, closer to resistance. Demanding premium entries results in a smaller risk per trade, which results in a smaller average losing size per trade. That right there is the best way to become a better trader, right there. I don't think anybody can convince me otherwise. The best way to become a better trader, the quickest way, is to get a better entry with a smaller risk. Staying with a winning trade for a longer period of time, that takes long. That takes a long time. That's like going from a 12 handicap in golf to a 2, or a 25 handicap to a 10. That takes years and years of practice. Staying with a winning trade longer. But containing your risk, that can be taught. This is going to be, I don't know if you can hear this or not, but okay. No audio past through, that's fine. Basically, this is CBC. And when oil was at 42, 3 months ahead of time, I went on air. I wrote a whole piece. I said oil is going to bottom at 26. So they brought me back 3 months later, and they're like, yep, Todd nailed it. So actually, I was the guy on CNBC, maybe you guys saw the story, that called the low in crude oil. And, I mean, not only did I make a call off the cuff, I wrote a whole research report about it. I sent it out to customers. I did a whole article about it. Like, I got after it. So it wound up being the low. It wound up going viral on CNBC.com and Yahoo Finance. Like, it was the #1 story. I heard from 100 people that day. It went pretty crazy. So all it was, guys, was just simple fib. There were 2 fib studies that I can teach you right now. Okay, so everyone trying to find the bottom in crude window, everyone's like, crude's going to $5 a barrel and whatever. Everyone's going back and forth trying to study OPEC and supply and demand and fundamentals and blah, 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 what the dollar was doing. 2 simple fib studies that I can teach you to do in 30 minutes called the low in crude. That was it. Okay, so if you don't know me, I'll just give you a quick intro. Steve did a nice job for me. I was from upstate New York originally, and went to San Diego to trade for a living, and then moved to LA for a little CTA hedge fund, and then moved back east. I went to Wall Street. I was a senior technical analyst for a brokerage firm at the same time. Parent company was a hedge fund. Traded for them. Left in 2010 when I met this girl because she could put up with me. I met her in 2008, I think. Married her in 10. Jake and Brody came around. They're upstairs. They're probably in their bath right now. Long story short, you got to show this slide. He was at our wedding reception because our reception was in Trump National in Bedminster. This is my best man, Jeff, doing what best men do, which is absolutely skewering me in front of everyone. Like all the bad stuff I've done in my life. I'm no price dude, trust me. I'm no price kid. And Jeff is just destroying me, and Trump and Melania in the corner just shaking their heads laughing like, oh my God. So the president knows all the bad stuff I've done, which we'll see. I've been doing CNBC for about 7 or 8 years now, and in fact, I'm on Power Lunch tomorrow morning. I'm on from 8 to 8:40, so I'm covering the jobs report. I'm going to be like the market commentary guy, so I'm going to be watching the market reaction right after jobs. So if you happen to watch CNBC, I'll be on from 8 to 8:40. And then I run the business from home. So that's me. I like to trade options. I love Fib. I love Elliott. I trade every single day. I trade my money. I run my educational business. My goal is build a business up big enough, get enough content under there so I can teach people how to do this, and then eventually hand the business over to Jake and Brody so they don't have to try to get a job in the real world. So that's me. Okay, let's go. Some myths here. Okay. Myths, facts. Technicals don't work when markets are highly emotional, and technicals are self-fulfilling prophecies. Have you heard this or said this? Let's take a look at the Dow from 1923 to 1929, and you guys know what happens next, right? Crash. Okay, so the Dow goes from 85 to 386, drops like hell, bottoms at 200. Okay, it not only bottom once, rallies up to 300, retests it again, lower high bounce, sells off, retests the same level as resistance, and then breaks away. Is this just a 200 level? No. In fact, it wound up being the 61.8% retracement, which is one of these key voodoo ratios that we're going to talk about. It's the 61% retracement level of the entire rally of the roaring 20s. So back to this slide, technicals don't work when markets are highly emotional. Well, the 1929 crash, that was a very emotional event. That was a horrible event. Country was only 150 or 60 years old or seen anything like that. So technicals and specifically Fib worked then, and they've worked in many crashes after that, and even not just crashes but short-term trading patterns. And number two, technicals are self-fulfilling prophecies. Could you say to me, Todd, the only reason the Dow stopped crashing was the 61.8% retracement? I can tell you that was the last thing anybody was thinking about when the Dow was crashing, is let's stocks at the collapse of this young economy because we're at the 61%. Fib won't be applied to the markets for another 50 or 60 years. So what I'm talking about with all this stuff, you can short-term trade with this stuff, you can call longer-term moves. It's all about anticipating and kind of wrapping it into a game plan. And that's what I like to do. That's how I like to approach the market. You can do this with anything, stock options, futures, or Forex. I like to trade options, but I've traded all markets with this stuff. Regardless of the vehicle you trade, it's about anticipating. That gives you the ultimate power. If you're reacting to this market, I think you're in big trouble. This market is way too complex, way too many players, way too many algos and HFTs and hedge funds are in there fading the breakouts and making this a tricky market. I think you need to be anticipating trades as early as possible, and that's the way that you get the smallest risk per trade, and that's how you drive your average losing size down. So it's this concept of being a market maker versus a market taker. Do you anticipate trades or do you react to them? I think there's very few opportunities in today's market where you just follow the herd in. Following the herd was a trading strategy that worked in 1998. Buying Corning above the old highs or buying AOL above an old high and just riding the breakout. Those days are gone. Okay, most trading opportunities require you to step ahead of the crowd, anticipate trade rather than react. When you anticipate, it puts you in a position of strength. So I'm going to pick on MACD again. MACD entry, black line crosses up to the red, gets you in about 750. A standard Fib zone entry, there's the bar that tests the Fib zone, which is these two horizontal lines. You buy the bar that moves above the testing bar, fine. So you're talking a 740 entry versus 750 entry. So you might think, well, okay, but why not wait for ultimate confirmation? Why not just take the indicator signal and then I'm going to get in when I really know the market's going to go? Well, how many times has this happened to you? As soon as you get ultimate confirmation from the indicator, the market goes back and retests you. So let's say you're in at 750. You didn't anticipate the market going to 735. You say, oh, damn, what did I do now? You exit the market, and then it rips up to where you thought it was going to go. You're down $15 in Amazon. You're pissed off. You're probably going to miss the next trade, right? Whereas if you have a good entry, okay, at 740, your stop is very clearly defined below the Fib zone low. The market went in your favor a little bit. You're like, okay, sweet, I'm up $10. And it goes back against me, and you're like, all right, I don't love this, but I can handle it, no big deal. Market comes down, it doesn't move below the stop. You're like, okay, I'm all right. And then the market moves up, and you participate in the trade. Okay, so by getting longer, deeper into support, and shorter, higher into resistance gives you options, and it puts you in a position of strength. I can't tell you, my entire career has produced this right here for me to share it with you. It might seem pretty pathetic that my entire professional career has arrived at this slide, but in my opinion, there's nothing truer than that right there. So Fib is the way I found it, and I'll save the story maybe another time. If you and I work together, I'll tell you the story. But how I eventually found Fib and how I realized it works. But along the way, the objections that I traditionally get, which I think are very valid, is where do I start and stop these Fib analysis? Which one of these 400 lines in the chart will actually reverse price? All these different tools are confusing. Like, all perfectly valid. And who's thought this? Okay, who said this? Who's thought this? And if you did, I would say you're absolutely right. Okay, so on display in the Louvre in Paris, France, is the Fibonacci trading scroll. Swear to God, not making it up. So you can see it on display. No, I'm lying. It was handed down by Leonardo Fibonacci de Pisa, and it's a 6-step trading process, okay? And I'm going to take you through the 6 steps of the Fibonacci trading scroll to simplify it and give you an actionable trend trading pullback strategy now. So step number 1 are the swing waves, okay? And the swing waves are going to be a higher low in the market that reverses trend in a very short-term manner. So a swing wave high is a high bar with a lower high to the left and a lower high to the right. And these can be bars or candles, doesn't matter. Swing wave low is a low bar with a higher low left and a higher low to the right. Okay, very simple. So up close and personal. Up close and personal, there's your high bar, lower high left, lower high right. Swing wave low is a low bar, higher low to the left, higher low to the right. And then what I do is I take it one step further. If that higher low in the market is not exceeded in at least 5 bars before and 5 bars following, it's given a purple dot, and that's called a minor swing wave. If a swing wave is not exceeded in the 13 bars before, 13 bars following, it gets a blue dot, and that's considered a major swing wave. Okay? So up here we got a blue dot, so you're going to count 13 bars left, 13 bars right, it gets a blue dot. Now I've got these indicators built for all the major charting packages, so you don't need to count them out. So they just appear automatically. So I think we're looking at, this is Thinkorswim. I built this presentation in, so I'll just pull up my charts right now. So you can see the purple and blue dots all over the charts right there. So those are the swing waves that I'm working with. Okay? So those are the swing waves. Now, we identified the way to look at how markets change. Sometimes there's short-term trend changes, which are the purple dots, and sometimes there's significant changes, which are the blue dots. It's not rocket science. It's just an easy way to kind of identify the most important swing. Along with swings, we want to look at the trend of the market. Okay? The strategy that I'm giving you now is a trend pullback trading strategy. I believe that 70 to 80% of your trades, in fact, it's more like 80 to 90, I should say. 80 to 90% of your trades are in the direction of the trend. It's a pullback strategy to the trend of the market you're looking at. 10 to 20% of the trades you do can and should be counter to the market. Okay? 1 out of 10, 2 out of 10 trades I do are going to be counter trend trading strategies. Not for everybody. It's only for people of diligent risk. So a very quick and easy way that I look at the trend of the market is with the DMI oscillator. Just real simple, directional movement oscillator. I bumped the default from 12 way up to 55. One, it's a fib number, and 2, I like to stretch that default out so I get less whipsaws and I stay in trends longer. So the oscillator just oscillates around the 0 line. The blue above is an uptrend, and the red below, oscillator below, is a downtrend. If the current market right here is in a downtrend, oscillator is down, you're thinking shorts only. I'm waiting for a pullback to get short in order for the market to continue the trend on the downside. So good question there being made. What timeline or time frame do you use for fib analysis? You can do my strategy that I'm teaching right now on any time frame. On a 1 minute, 60, 120, 240, 360, daily, weekly, monthly, quarterly, yearly chart. Whatever you want. Whatever market you trade. It's just got to be liquid, thick, tradable. Doesn't matter what time frame. Okay, so we're in a downtrend. Oscillator's down. We know what the purple and blue dots are. So we're starting to figure out how markets trend. I'm going to skip that one. Okay, so we're like 25 minutes into the presentation about fib, and I still haven't given you one Fibonacci tool yet, right? So let's keep going, and you'll see why. So this is Google on a 60-minute. We have a blue DMI oscillator, so we're on an uptrend. How do you find the most recent trend swings and important trend swings to base your fib on? And that's one of the most common objections I hear in fib is, where do I start and stop these stupid things? Well, the way we do this is in an uptrend, you're going to find the highest price on the chart, which is going to be right here, and then you just simply look for the most recent blue dot low. That's it. Okay, so you find the most recent blue dot low, you go up to the highest price. This guy's a purple dot, which means we've got at least 5 bars off to the top, 5 bars. Obviously, we have 5 bars off to the left that don't break that high. We don't have yet that 13th bar that's closed, and when that 14th bar opens, that doesn't break above here, that's going to turn blue. But that's fine. All we need is a blue dot low up to the absolute high. That's the most recent and relevant trend swing that you use for fib calculation later on. Okay, let's switch to a downtrend. We've got a red oscillator situation. So this is Google 60-minute in a downtrend. We have a blue dot high to blue dot low. That is going to be a trend swing. The trend is interrupted. We then get another blue dot high that breaks into a blue dot low. So looking at the past in this Google chart, this is going to be two separate trend swings. We've got a trend swing here capped with blue dots, and we've got a trend swing here capped with blue dots. The overall trend is down, but a trend swing, there are two of them. We could also use these blue dots for counter trend corrections. Okay, so we have this blue oscillator right here. This guy is in an uptrend. This is Amazon in a 60-minute. We've got blue dot high to blue dot low against the established trend, which is up. Any blue dot high to blue dot low, that's a counter trend correction. That's important. That's valid. You want to put that in your pocket later on for fib analysis. You use absolute highs and lows or bodies. Bill, I use absolute highs and lows. I really don't use the bodies of the candles. I use the highs and lows. Mike Art, very good joke. 38.2% of the time is expired. That's a really good one. I'm going to use that in the future. Okay, step number 4. And don't forget, I'm going down the fib scroll with all my fun stories. Don't forget, we're doing the fib scroll, which there it is. We're already on step number 4, and we're not really even in the fib yet. So that's why I think it's important to understand, the characteristics of how a market, at least from my point of view, how a market trades, where the corrections are, where the trends are, and that's going to help you understand the context of the market and then help you figure out which tools to use. Okay, so this is Google 60-minute. We got blue dot low to blue dot high against the downtrending market. That's a counter trend swing. Blue dot low to blue dot high, counter trend swing. Okay, so we've got two corrections that are important to look at later on for fib analysis. So finally, we get into our first fib tool, right? Retracements are the most basic Fibonacci tool that we're going to look at. Holistically, what do? They help you accomplish the goal that, as I said, should be 80 to 90% of your trades, which are 80 to 90% of your trades should be trend pullback trades. You're trying to identify the trend in the market, find a short-term correction against that trend to establish trades in anticipation of trend resumption. So you've got to look at where the trend of the market is. Well, we know the DMI oscillator is blue. It's above, so we've got an uptrend. We're going to look for the most recent blue dot low, and there she is. We're going to go to the highest price following that blue dot low. This guy's turned to a blue dot, so we must have 13 bars off the top. And you're just trying to figure out what percent of the prior trend will be recaptured with this prior trend. What percent of this correction will recapture that prior trend? So there's four main retracements that I use. So if this is a $10 move, so the stock goes from 60 to 70, the $10 move is going to bring you all the way down to 100%. A $5 move will bring you to 50%. A $3.80 move will bring you just to 38%. So those are two minor retracements down here that I use on separate occasions. Okay, but that's all a fib retracement is trying to figure out how far a correction will go before the trend resumes. So where do you want to start and stop your fib retracement? Well, you want to start it at the most recent blue dot low up to the high price. So let's take a look at Amazon 60-minute, blue oscillator. So we're in an uptrend. We're going to find the most recent blue dot low. There she is. You're going to go to the highest price following that blue dot low. There it is. That is a very objective way to apply Fibonacci retracements. There's no questions asked on that. Okay, so on toss, you hit drop down, you go fib retracements, and this is pretty much the same for all charting packages. You're going to click the beginning of the trend once, and then you click the end of the trend a second time up there, and that's how you apply fib. Okay, so let's just do a couple little examples here. Throw some symbols at me. Google comes up. Throw some symbols you guys are looking at. Okay, we are in a green, barely in a green oscillator situation. So how do we properly draw a symbol on retracement on Google? Well, look for the most recent blue dot low. There she is. You go up to the high right there. So that's how you draw proper retracements. You go drawings for retracements, blue dot low, up to the high, and right to the 618 retracement. Okay. NVIDIA, I've got positions all over the place in NVIDIA. I've got credit spreads like out the wazoo in NVIDIA. It's super high implied volatility right now. Bad example because I have so much fib on this right now. Okay, so this is not the time to get in NVIDIA. we bought the pullback here. I have 195 put spread as the market's moved up. I added a 113, 117 call credit spread. I'm taking a little bit of heat on a call credit spread, whatever. So this is not the time to be buying NVIDIA. This is trying to buy a breakout like it's partying like it's 1999. Okay, we don't do that. So the way NVIDIA's in an uptrend, so you got to find the most recent blue dot low, which is right there. Click once, go up to the high. You need to be waiting for a pullback. Can't be buying up here, right? Got to wait for a pullback. Hardest thing here is patience. Okay, patience, waiting for the market to come to you. That's the thing that people struggle with the most. Okay, so same thing. Just like NVIDIA, it's a chip stock, right? Blue dot low, up to the high, got to wait for a pullback. Just look at symbols, MCOA. Wait, Marijuana Company of America. All right. Okay. All right. You know, all right. So green oscillator uptrend, hit drawings, go to retracements. Where's the blue dot low? There it is, blue to blue. Okay, actually starting to move into retracement zone. You know what? We'll come back and trade this marijuana stock. When I show you the next fib tool, you need to do it ahead of time. Ooh. You know what? I might be looking for about 0.695. I don't usually trade stocks that are less than 25 cents, but it's weed. Why not? It'll be okay. Let's go chemical. And again, you can't trade with just fib retracements. You can't. You've got to add other tools. This is the foundation and starting point for fib, for trading with fib. Retracements are important, but they don't stand alone. So uptrend, there it is. You look for the most recent blue dot low. There it is. You're going to go blue dot up to the high. That's fine. All I want to do is show you how to properly do retracements. Okay, so you go from the low up to the high. You guys cool with that? Everyone know how to do fib retracements like a pro now? Okay, perfect. I'll go back and do symbols all night. Let me show you the next fib, and it's going to start to come together. But again, you can't really trade just based on retracements. I just want to show you guys how to draw them because they're going to be a part of the puzzle. Okay, fib tool number 2. This is really, really cool. This is my favorite fib tool. Birthday cake. Okay. So we just did fib retracements. What they do is they study a trend wave to figure out how far this correction might last. A projection, okay, is going to study a prior corrective wave and apply it to the current corrective wave to help it figure out where it might go. So I said again, a retracement's going to study a trend wave to figure out where the correction is going to go. Applying fib to corrective waves, we're going to look at a prior corrective wave to help figure out where the ongoing corrective wave will go. So this distance right here is going to be very important. We're going to slice it up by the primary projections, which are 38%, 61, 100. This is key. This is what you call the measured move or symmetry or AB equals CD. There's a bunch of names for it, a two-step pattern, bunch of names, and all that means is this is a $2 drop. Your $2 drop is going to be right at the 100% projection. And if the symmetry or measured move doesn't hold, one of the other fib ratios will be standing guard trying to help figure out where this correction might stop in order for you to get a low-risk, high-reward trend pullback entry. Okay, so let's jump in. This is the S&P 15-minute. This is the SPOOs. We have a downtrend, red oscillator. Okay, we know what we do with the retracement, right? We look at the most recent blue dot high down to the low, but we also need to look at all prior blue dot low to blue dot high corrections against the established trend, which is down. So looking at this chart, in the downtrends, do you see blue dot lows to highs? I see one here, blue dot low up to blue dot high. I see a blue dot low to blue dot high. This one is a purple to blue, so that one doesn't count. So there's two main corrections on this S&P 15-minute futures chart that we're going to use to project where this correction might end. So on toss, you hit drawings down to fib extensions. Now this causes some confusion. They're not actually called extensions. They're called projections. And a lot of charting packages, Thinkorswim included, made this mistake. They're called projections. you'll hear me refer to them as projections, and don't let it confuse you. So looking at the prior trend swing or corrective swing, you're going to use your projection tool. You're going to click the beginning of that correction first, the end of that correction next, and then you project off the low of the ongoing correction. So it's a three-step process. You click once, click twice, click a third time. So whatever this distance is, this looks to be about 5 S&P points. So that 5 S&P point is going to get you up to 2148, and then 161% of that, so maybe add on another $1.50 or whatever, is going to get you up to the 161% around 2152. Double that would be the 200%. Okay, these are possible stopping points for this correction based on this guy's opinion. But we're also going to get this guy's opinion as well, because we got a blue dot low to blue dot high. We're going to go off the same swing point low. There's our red ratios from before. Those are the red rectangles right there. We're also going to do the blue ratios. So this guy from 2141 to 2153, that's the 100% projection. This distance, which is about 12 S&P points, is exactly equal to this distance. Okay, you really want to look for those symmetries. So what we're doing is taking this guy's opinion, getting this guy's opinion to help figure out where this corrective wave might end. And guys, when you have a market that you're trading well and like you're on the same page, you just seem to have the flow of the market. Well, it's probably got good volatility. It's got good volume in it. You've got it kind of figured out because it's showing good ebbs and flows. That's what we're looking for. When you're in a good trading volatile market, past price swings will have an impact on what your current price swing is going to do. But we don't trade markets that just go straight up and then straight down and then just go sideways for a little bit, up and then down. And we're looking for flowing markets that are showing good volatility and pattern and good price dynamics, and that's what we're looking for. So when you find those markets, past price swings will definitely have an impact on the current price swing. And Fib can help you explain that a little bit. So pulling these two studies together, projections and retracements, remember, here's the S&P. We're going to go off the blue dot high down to the low. That's your retracements in green. Projection of this correction off the low, those are your red levels. Projection of this correction off the low are your blue levels. So all of a sudden in the S&P, you've got 1, 2, 3, 4, 5, 6 levels to say there's resistance in the S&P from 2152.5 to 2157.5. That's a 5-point range, right? So you can trade this a bunch of different ways. If you just want to go short S&P futures and put a 6-point stop up there, a 5-point stop, that's fine. If you want to sell call credit spreads in the SPY or the SPX above it, that's fine. If you want to buy an at the money put debit spread, that's fine. If you want to do a butterfly below it, that's fine. If you want to short the SPY, put a stop above it, that's fine. However you want to handle it. If you're a short-term future scalper, you can sell every rip, put a tight stop in the zone. Sell every rip, put a tight stop. Sell every rip, put a tight stop, and eventually get the move that takes you out of the zone. Okay, you can handle that zone however you want. Okay, so that's how you combine these two. Now let's go back to the charts, and I just want to kind of make sure we're okay with projections. All right, what was that weed stock you showed me? What is it again? Let's throw it in there real quick. It looked like a good one. What was that marijuana stock you guys threw in there? That was actually a good setup. Let me scroll back. MCOW. MCOA. Okay. So let's get rid of everything. Remove drawings, remove drawings. Okay. So let's do never mind, it's not a good example. Nope. All right, throw some other ones in there. Yeah, it's not. I thought it was a blue dot to blue dot, but it's not, unfortunately. Go to 1 hour. No, that was not going to work. Give me some good ones. UPS, okay. UPS got smoked after hours. Okay, the way you would do this, okay, so this is kind of a funky one, but you go to Fib extension, so you find the most recent blue dot to blue dot correction, so it's blue dot low to blue dot high. So what you do is you go drawings, extensions, blue dot low up to the high. So you click once, you click twice, you click a third time. That's the proper way to compare this correction to this correction. But that's a new stock, so give me another one. EAH. And also throw a time frame on there. So this is a beautiful one, okay? So look. And I'm going to do just a little Monday morning quarterbacking for you, but look. Blue dot to blue dot, how does it compare to that one? All right, so we went to the 1272, not quite through there. That's fine. Let's compare this swing to this swing, blue dot to blue dot. This guy went just through the 100%, but 1272 held. So it looks like this stock really likes the 1272s. So the way I would set up trades in PAH is the trend is obviously up on the 60-minute chart. We're going to find the most recent blue dot to blue dot high to blue dot low projected off the top. You're going to click once, you click twice, and you click a third time like that. And then we have some target zones. I generally don't do less than a 38% projection, but here's your zone. Okay, 61 to 168. That is your area of interest. We also have this guy, this blue dot to blue dot. So you click once, you click twice, click a third time, project off the top. And then I like to change the color just to keep them separate. Get rid of any extraneous levels, and you just start looking for confluence. So where is there some agreements? There's a little agreement there, a little agreement there, and a little agreement there. The last tool you're going to use, as I mentioned, is you're going to do your retracements. So you go drawings, retracements. This is a very hands-on process. Okay, this is for people like to roll up their sleeves and kind of get into the charts and see what's behind it. So for PAH tomorrow, you write down in your trading journal, you put a little alert on Thinkorswim. If PAH goes between 1204 and 1190, somebody give me a ring or get me out of bed, because that's where I'm interested. Okay, then there's another zone down here, but I'll just eliminate it just to keep it simple for now. That's our first zone of interest. Throw me two more stocks. Apple, okay. All right, so Apple, big gap up. So if we're getting a correction, how far would the correction go? Well, the trend is up, so we're looking blue dot high to blue dot low. You go drawings, you go extensions, you're going to go blue dot high to blue dot low, off the top. Hey, what do you know? That was 100% tried to hold, but eventually the 1272, wow, we're getting a lot of 1272. That guy held right there. Okay, the 1272. So we're starting to build zones. All right, give me some other stocks. TNA. I don't like to do the ETFs. I just like to do the underlying, right? So I do the analysis. You can trade the double and triple leverage, but I like to always do the analysis underlying SPX or IWM or RUT, if that's okay. You could trade the derivative, but always analyze the underlying. Let's see what's going on up here on Caterpillar. I got a lot of stuff going on my charts right now. Actually, Caterpillar, I did this one in another session live. We came up with this zone of resistance that held really well. We backed off. Okay, so we have a DMI that's up. Okay, so let's do two pieces of analysis here. We're going to study this correction, and we're also going to do a retracement. So drawings, extensions, that guy compared to this guy. And I'm going to change his color just to keep them separate. And then let's also do this blue dot to blue dot off the high. Okay, now let's add the retracement in. I'm going to get rid of them because those price supports are broken. So we have a little zone of support here in CAT. Drawings, retracements. Let's go off the most recent blue dot low, which is right there, up to the high. And now you're going to start diving in. Okay, so 38%, 50%. So for tomorrow in Caterpillar, there is a really good zone. 61% retracement, 61% projection, 78% retracement, 100% projection. We're using 3 different price swings to come up with a zone of support right here in CAT. Is that going to hold? I don't know. Okay, I don't know. But I would put a stop at 91.85, entry at 92.85, risking $1 to get to at least 97.86. So you're risking $1 to potentially make 4. Implied volatility is in the 11th percentile. It's super cheap. Post earnings. The only way I would do this is a call spread, buy the 93s, sell the 97s. That's the trade. In fact, I might do that trade tomorrow if the market doesn't fall out of bed. Okay, I'll give me one or two more, and then I'll keep moving. And then, guys, let me know if I'm bumping up against the time. I'm taking way too much time in this, but just let me know. That's a bad-looking stock. Salesforce looks terrible. Get up to there. Okay, so blue dot right there, blue to blue. And we'll just go off of here. The drawings, extensions, blue to blue, off the top. The drawings, the retracements, there's the blue dot low, up to the high. You're just looking for agreements, and you're looking for tight clustering. They don't have to be right on top of each other, but you're looking for an area of confluence. There's about 3 or 4 levels right there in CRM between 79 and 78.25. Okay, so I just gave you a quick crash course in Fib. Okay, let me keep pushing. Let me make it even better. Okay, good question there, MM. I'm gonna answer that. Why do you use the 55 instead of the 14 period? It's actually the DMI, not the ADX. The ADX is the purple line. The DMI is the oscillator here. If you use the default 12 or 14, you're going to see this thing like up, down. You're going to see it go green, red, way too many false signals. Like if you sit back and you say, what's the trend of this market? It's up. I mean, I don't want to see red, green, red, green. When it's too short of a DMI period, you get too many false signals. I want to know what the overall trend is. So that's why I really bump up those defaults, MM. Okay, so we can make Fib even better. This is called power waves. First ever proprietary indicator that reinforces Fib zones to add a greater degree of reliability. They appear on your chart automatically, and they update in real time. They offer tradable levels to go long, support levels to go long, and resistance levels to go short. They're automatically calculated based on those purple and blue dots, which are the major and minor swings. So the way these things unfold is they just appear as 2 green or red lines. These are buy levels, and they're based on prior price swings, and it's an algorithm that goes to work, and it helps figure out where likely support is. So the way this thing works is we look at the DMI 55 period oscillator. It's above 0. It's green, so we're in an uptrend. So the buy levels are going to appear automatically. The thin green is your minor buy. The thick green is your major buy. Okay? They are based off the purple and blue dots and all of the swings, okay, in the look-back period. All right? So let me just do this. Study. Style. Okay, so here's what they look like. This is CRM. There's a thin green and there's a thick green. These are your major power waves. They are based on a look-back period of 500 bars. So what it does is looks over the last 500 bars and figures out based on all the swing waves where the most likely buy and sell levels are. If you're in a downtrend with a 55 period, the red sell levels appear. And the idea is you want to wait for the market to come back, test these levels of support resistance in order to establish trend trades. This is a downtrending market, so you want to wait for the market to rally back to get short. Okay? The thin is the minor power wave. The thick is the major power wave. The minors are based on a combination of purple dot to purple dot swings as well as purple dot to blue dot swings. The majors are based on a calculation of only blue dot to blue dot swings. So it is a calculation that goes in there. I developed the idea, but I had help from a buddy of mine who is a PhD computer programmer for Morgan Stanley. He's actually leaving, and he's trying to get into the trading business. He's leaving. He's a PhD in computer programming at Morgan Stanley. He's getting into the retail business. So he's out in programming, but it's pretty awesome. So as I already mentioned, power waves are calculated based on a certain look-back period using the major swings. The minors are based on the minors. Okay. So as you throw them up on your chart, they will appear automatically. So Russell is in a downtrend. Red's your sell. Sell, those are your buy levels because we're in an uptrend on the Qs. You get the point. Go back to our S&P 15-minute chart. Do you remember seeing this thick horizontal red line on the chart? This is your major power wave sell level. This bisects the fib zone that we calculated based on this retracement, rejection of this correction, rejection of this correction. When you get a power wave bisecting or coming up very close to one of your fib support or resistance zones, that's really going to draw your attention and be like, this is where I need to be trading. So it helps further reduce some of the subjectivity of fib by saying and I got people who just trade options based on these things alone. Okay? So guys, the whole point of what we're teaching here is to anticipate using these tools. We want quality entry using fib and power waves to see entries minutes, hours, days ahead of time. That's how you truly contain your risk. That, in my opinion, is how you become a better trader. And I think absolutely can you combine Steve's wonderful candlestick work. If you find a candlestick entry in a fib support or resistance zone with a power wave in there, you're good to go. Oh, that's loud. I just traded this live for customers. This is GDX. Hold on. GDX, we've got a fib support zone into the green power wave zone, a fib resistance zone up in the red power wave sell zone. If you have an anticipated support entry of the trade and an exit in the trade for an options trader, that's really valuable because you can buy options down here and you can sell options up there up to your objective. You can finance the purchase of your calls by selling out of the money calls up into your fib and power wave entry. This particular trade, I actually did this with an iron condor because GDX was really high implied volatility. Those of you who trade options will understand this. If you don't, no big deal. I did a 28, 29, half 31, half 32, half call credit spread. Iron condor. Took in 78 cents. GDX was super high implied volatility. Executed the trade live. Filled. Sent the trade alert out to customers. Just played the thing through. We went down to the fib support. Actually dipped below the power wave buy. Eventually moved up. It was great. It was fun. Moved up into the sell zone, and that trade worked. They don't always work, which is fine. I'm booking profits on it. I was in the trade for about 2 weeks, made $1,000 in the trade, did the whole thing live, selling my 15 lot, closing it for everything's worth less than a penny. And this was a fun trade because I was actually just driving upstate New York, which I told Steve about. This is my second job. I have a second job. So I co-own a distillery, a spirits distillery in upstate New York, and we have vodka, which I have 2 bottles right here. We have a vodka, we have a whiskey, which we have a rye and a bourbon as well. The bourbon is coming out very soon, but it's kind of a long story. I'll tell you about it later. It's kind of fun. So I just brought my computer up, taped the whole thing, put it on YouTube, and then as soon as I was done closing on the trade, I jumped right up on the still, and I'm doing the mash tun. I get to work. I get dirty. I get my hands dirty. It's a hell of a lot of fun. And plus, the spirits industry is booming. I don't know if you know that. The handcrafted spirits are booming right now. So I invested just to diversify from the stock market. So it's kind of fun. Anyways, okay. So I mentioned that you can counter trend trade with this stuff. And this is one fun trade that worked out, but this is Green Mountain Coffee. So if you remember GMCR, back in 2015, the stock was getting crushed. Right? From 158 it went to 38. The stock was getting murdered. I kind of had a feeling this thing was way, way overdue for a bounce, and I wanted to put an aggressive trade together. So I came up with a fib support zone. Here it is right here, between 45 and 38 bucks. Earnings came out right here. I don't know if you guys remember this, but the earnings were terrible, and the stock gapped up from the fib support zone on bad earnings. So I was like, okay, here we go. So I put the trade alert out. I sent it to all the customers. I did a whole write-up in our members area. Like, guys, I'm taking an aggressive move on this. We're going to go counter trend. Here's the plan. And I did a bear call ladder. It's a pretty aggressive reversal strategy. So it's selling a call credit spread, selling 52 half, buying 55 call, taking in that credit, and buying an out-of-the-money call. So you take in 5 cents. So if I'm wrong, the stock collapses and it goes bankrupt, you make 5 cents or $5 an option spread. If the stock goes sideways, I'm going to get hurt the most on that call credit spread. But if the stock really reverses, you make a lot because you've got the uncovered call. So what happened was the stock gapped up in bad earnings, kept going, we had the trade on, and then the thing got bought out. It was lucky. They don't all work like this. Trust me, it's just fun. And I have a reason why I'm showing you this trade. But we had the uncovered calls that we bought for 85 cents, went to 32 bucks. So it was crazy. I had customers who tripled their account overnight. It was really fun. So I took the profit from that trade, and that's what I used to help invest in the distillery. So I took profit from a coffee trade and bought a booze factory. So it's a good investment, right? I mean, spirits are booming. And if you start trading like hell, you got free liquor. So, guys, the whole point of the presentation here tonight is, for me, stop chasing these indicators around. You know, you've got tools with Fib. You've got the candlestick patterns with Steve. And if you can find quality reversal zones hours and days ahead of time, what do you need the indicators to tell you what you already know? All they do is react to the price change. And if you're reacting, you're taking on more risk by waiting for ultimate confirmation. And when you're not trading well, the ultimate confirmation that you're paying up for by waiting for the entries in is going to cost you. So anticipate trades, get in closer to support, and you will be a better trader. Joe, you've got it. Raymond, I'll tell you what brand distillery. The problem is my marketing department, who Steve knows well, yells at me because if I give you the name, everyone leaves my presentation just as soon as I'm getting into the good stuff and checking out my spirits website instead of my trading website. All right. So again, looking at trades, anticipating reversals, that's what we're talking about. And if I get stopped out, which I get stopped out all the time, I'll probably take the small risk that I calculated out ahead of time. And if it works, great. If I get stopped out, that's fine too. Okay, it's about accepting the risk ahead of time, trading like a market maker instead of a market, trading like a market maker, not a market taker. Okay, so it's a game plan, right? We're not chasing the markets, no stops, haphazard stops, trading by the seat of your pants. We're using leading indicators. We're into the markets at tight reversals with tight defined stops. That's a game plan. It's enjoyable. It's repeatable. It's a comfortable trading process. Anticipation is the power. If you react, I think you're in trouble. So if you want to go ahead, of course, I have a next step for you, and this is actually something that's hot off the press. We just did a live trading session. I have a course going on right now. If you want to go to the next step, if you are interested, somewhat interested but confused, that's perfect. That's exactly where I want you to be. I can fill in all the blanks for you. So the course is called Precision Timing Your Options Using Fib, and I'm right in the middle of the course right now. You guys are the last, I'm sorry to say, but the last group that I'm speaking to try to get into this course. We're live trading now. So in this course, I share with you all of my Fib strategies I'm using to trade debit spreads, credit spreads. We did a lot with ratios. We did a lot with diagonals. And we're just getting into the butterflies. I've got butterfly trades on all over the place for earnings. I've got a butterfly going on Amazon right now. I think I'm going to take some heat tomorrow morning, but that's okay. I accepted the risk ahead of time. So stop risking capital on substandard setups. So the course is going on right now. We will teach you everything you need to know about how to construct the Fib support and resistance zone, my three favorite advanced Fib patterns, my favorite time frames, the trading rules, and the Fib tools settings. I'll show you how to set up your Fib tools properly. You get a checklist and cheat sheets, entries, stops, entries, exits, including stops and targets. I'll show you how I scan the markets to find the best Fib setups, how to filter out the best trades, etc., etc. You can go to the next level. If you're new to options, don't be scared. I do a pretty nice intro, I think. If you have a decent basic understanding of options, that's perfect. Let me fill in the blanks for you and get you into Fib as well. We're biting off a lot in this course, okay? To do Fib and options at the same time, it's a lot. I wound up trying to do 1 2-hour session for content. I wound up doing 2 3-hour sessions. I broke it up over 2 weeks. It's wound up being 6 hours of content. So anyways, I'm getting off the script here, but whatever. Traders who want to anticipate quality trade setups, those who want to find the market turning points that others don't see, that is so key. Like if you go away for 2-3 days, it's amazing how the market just fills itself into Fib, resistance, support, and you come back and you're like, oh boy, that would have been an easy trade to take. If you can follow a simple set of rules and directions, if you believe your trading success is tied to quality setups, this is for you. This is not the Holy Grail. This is not the keys to the kingdom or get you on no yacht with the Wolf of Wall Street by March. It's an edge, and it's for street tough traders who want an edge and who want to work to exploit it time and time again. It's recorded. It's ready for you to view right now. You don't need special software. It's yours to keep. It works in every freely traded market, whether you're a 1-minute future scalper or swing trader or position trader or even an investor. Of course, will be 15 hours altogether. This is when I originally did the course. I did the first half on January 18th. It's supposed to be 2 hours, content total. It went 3 hours. I did another session January 25th, another 3 hours. I did a live trading session that next Thursday, so it must have been the 26th. I did my next live trading session this morning. I've got one more live trading session next Thursday. It's all recorded. It's ready for you to view right now. Right now, you've got about 10 hours of content. The PowerPoints are loaded up there. I've got a few of the tools I still need to post up in the course homepage, but it's ready for you to view right now. So the offer link is tradinganalysis.com/get. Thanks, Becky, for dropping that in. And it's kind of weird. You got to drop the http://. It doesn't work any other way. It's kind of annoying. That's why. Tradinganalysis, analysis.com/get. So here's what you get. 2016 version. I included last year's course for the heck of it. So the old course is already in there for you. You get the new course, which includes the 4 tools of fib price, 3 tools of fib time analysis. Those of you who are options traders, fib time is super key. Really, really key for picking out the right expirations. Option strategy selection tool, stop loss and stop trail plan, checklist and cheat sheet, profit taking plan, 3 live trading sessions, which I just finished the second one this morning. You also get the swing wave indicator. Those are the purple and blue dots. You also get the power wave indicator. Those are the green and red sell lines. I have them built for all the major charting packages. Now, I didn't show you, but you can put both levels up there. Okay, you can put the buy and sell levels at the same time. Okay, so for CRM, we have a sell level coming up at 82.60. We blew through the first sell level here at 75.55. That one held for a couple days, blew through. This is the buy level. That one holds beautifully. Okay, these are automatic buy sell levels that come and reinforce the fib. Okay, these, let's see where they are for Amazon tomorrow. We have support at 797. That's the first green buy level. Then the thick green is going to be 758. All right. So for retracements for tomorrow, Amazon last I checked was like 805 or whatever. So we're going to go blue dot up. Okay. So we have a 794 is going to be the minor wave buy and the 50% price retracement. Also, you're going to do this extensions, blue dot to blue dot. Where's your buy level tomorrow? Okay. Sorry, I should be doing a pitch, and I'm just back to doing market analysis. But there's one level there, and there's a really good level at 797 in Amazon. 797 is where we want to be focused. So, yeah, look for 796, 797 tomorrow. Okay, back to the presentation. So all together, guys, you get all that. I'll teach you how to do it, trade the options. You get that's over $1,600 worth of content. Never charge you guys for that. I would, but no. So $200, less than $197, you're good to go. So you're talking 6 hours of content. You're talking all the PowerPoints. You get the power wave indicator. You get the swing wave indicator. You got another live analysis session. Everything is there for you. We sold it for more. You guys are just a little late. You're the last group that we get to talk to about this. So that's why we're just kind of, here is the course, by the way. Education, precision, time, and coaching sessions. So when you buy the course, you'll get a username and password to my website. Okay, and here is the session. Right now, we just did February 2nd live trading, February 9th, and here is content session, part 1 of 1, options, debit spreads, credit spreads, diagonals, and ratios. On the 18th, part 1 of 2, debits, credits, diagonals, and ratios. January 25th, part 2 of 1, Fibonacci, intro to fib. January 25th at 9 p.m., part 2 of 2, Fibonacci applied to options. January 26th, 10 a.m., live trading. February 2nd, this morning, live trading. And the 9th, we'll round that out for live trading. And you also go to resources and downloads. Here's the power waves and swing waves. Those are the downloads for all the major charting packages. So that is the offer. Okay, so far, the feedback has been very, very good. for it. So here's all the downloads. We've got it built for all the major charting packages, videos, et cetera, how to install the indicators. Okay, so we have 25 spots available. We always limit it because this is a live session. I try to give everyone interaction. So 25 spots. When this goes, we'll shut this down, and then we'll be good for live trading next Thursday. Okay. So good question there, Don. What's the average time in a trade? For me, I'm an option trader. If I'm trading weeklies, I'll be in there 1 to 2 weeks. If I'm trading monthly options, maybe 3, 4, 5 weeks. Sometimes I push things out 2 weeks. But again, the fib, you can do this on any time frame. If you're a 1 minute scalper, you could be in the trade for a couple minutes. But for me, I'm a swing trader. I like to be in for a couple days, couple weeks. Yes, Gator. The program can be used for trading equities only without options. Yes, absolutely. How to pick the right strike? Yes, the right strike is using our fib. So I taught you the retracements. I taught you the corrective projections. I also need to teach you the trend projections. I need to teach you the extensions, which are really important. All of the major fib tools come together to help you figure out where the proper strikes are. Okay, where to buy the right strikes, as well as on the horizontal scale on the x-axis to figure out the right option expirations. And if you're not trading options, that's fine too. It's always important to know how long the move should last so you can manage your expectation. Right? How long do I need to condition my mind to be in the trade for a couple hours or a couple days based on the prior price swing? So knowing and setting your expectations, managing our expectations is really good to keep those emotions to a minimum when you're in a trade. Okay, no, you don't need to use TOS. I have this built for eSignal, Thinkorswim, TradeStation, MetaTrader. What else? eSignal, TradeStation, MetaTrader, Ninja, Thinkorswim. What else? Yes, Clint. Will the course teach a hands-on approach? The only thing, Clint, is you won't be able to put the blue and purple dots up there. My broker doesn't allow a load up of indicators. You won't be able to put the purple and blue dots, but if you don't mind, you can count them out pretty quickly. It's not that hard. It's just counting 5 and 13. The other thing is, throw a couple $100 in a Thinkorswim account and just don't even trade it. Just open the minimum, just open an account, and you're good. Those are the only charts that you're going to need. That's what I would say. There you go, VL. That's a good idea. I didn't even think about that. Keep a box of 13 bars in my charts. That's a great idea. Yep. Very good idea. Yeah, that's what I would do. Just throw some money in a Thinkorswim. TradingView is great. And we are in the process of building it for TradingView. And TradingView is free. And I will have it available for TradingView. It's not completely done yet. That's fine. I have Bitcoin trades going on. I'm trading a lot. Anybody in there trading Bitcoin? I've been trading in and out. This is one of the most technical markets out there. I apply it with fib all the time. My first entry, no BS. I bought Bitcoin at 330. Actually, 325. This was the 618 retracement right here in Bitcoin. I loaded up, sat through that. I loaded up, I sat through that. I just added. Swear to God, this is no BS. I added more up here. I bought it at 330, added at 740. Big zone of resistance in Bitcoin. I tweeted it a bunch. I said, everyone's going crazy. Bitcoin went parabolic. I was like, guys, resistance, resistance, resistance. There's like 5 fib levels up here. I threw this. You can find it on my Twitter account. 10,000 to 1148 fib resistance. The high was 1127, right in the zone, and then we got crushed all the way down to 770. I'm still in. We held this fib projection zone, and we're coming back. So we should be able to get to an external retracement up to about 1,300 in Bitcoin. So I'm staying in. It's a very good trading market right now. Anyway, so you can apply this fib stuff with anything. So that's the offer, guys. I hope you enjoyed it. Let me answer any other questions that you guys have. Tom McClellan did a great article on Bitcoin. Cool, Karen. Where can we find that one? Yes, made it your indicator red and green lines and any charts on TOS. Yes, it does. It does it automatically. But there's Amazon. Here's S&P. We got minor buy tomorrow at 12:43. Major buy at 22:16. Major sell at 20 or minor sell 23:36. Major sell at 23:93. Okay, cool. I'll check it out for sure. NASDAQ. Okay, so we're through the sell level. So what the way the swing waves work is we go off the most recent swing wave low. So the most recent swing wave low is going to be this blue dot low. So the minor power wave sells right there. We held it for about a week. Eventually we broke through. Then we went up, and we've got the major power wave sell. So when it's in an uptrend like this, we're going to go up the most recent swing wave low. All right, and then in terms of the buy levels, we're going to go up the highest price. There's no swing point high, but on the pullback, this is what we're looking to buy. So those are your buy levels, those are your sell levels. So yes, they do come up on the charts automatically. How we do Fibonacci extensions, which I didn't get to talk about, blue dot to blue dot. Let's see what's lining up for tomorrow. Right, 1272 held beautifully, sold off. Went to 169, 200% at 51.95 in the NDX. So okay. All right. Okay, perfect. Yes, David, I did a big thing this morning. You cover your program, your method for scanning, selecting stock candidates. Yes, I do. I did this morning. Don't have it built for TC 2000, unfortunately. Nope. But it's nice to have. But if you want to learn Fib, I wouldn't let this indicator, which if in the future you get a charting package that allow you to install this, great. If you want to learn Fib, I think it's a wonderful program for $200. I wouldn't let it trip you up. If you're interested in Fib, it's great. This is a nice add-on for Fib that you get. You buy it and you get the charting package later. You get Thinkorswim or whatever. We'll give you a code and you can download it. And you're going to have it forever anyways to access, so you can just download it when you want. But if you want to learn Fib, it's good. And it complements candlestick patterns really well. And you get a big, thick zone, you find a candlestick pattern you like, rock and roll. Yes, TradeStation. It's working on TradeStation, Scott. Yeah. Predict support resistance for the Russell tomorrow. Yes. And Steve, Becky, Jim, if I'm keeping people and you guys want to get out of here, let me know and I'll stop talking. I don't want to overstay my welcome. God, Russell's a mess. It's just so sideways. I looked at it this morning. Actually, this afternoon after the close, I was doing the member video. I'm like, what the hell is the Russell doing? Do something. You get the power wave buy at 1338, and then 1307, the major power wave buy, minor sells, 1470. There's just nothing to do. I mean, we can go down, and I'll get down in intraday, but just keep in mind that daily chart is a straight-up mess. All right, so I mean, even I can't do it. I just can't do it, Captain. Even the 55 DMI has got no trend. It's barely. It's up. It's down. It's up. No, I just can't do it. Just because the market is terrible. So, good question there, Don. Does it include the vertical lines for time? The time projections are done with Fib, and I have all sorts of trades going on with NVIDIA, and they're all I have them on. These are live trades in this account. I have them in this account right here. I've got kind of all sorts of things going on here in NVIDIA. It's based on it's based on high implied volatility stuff. Let me get rid of this stuff. Keep it simple. Let me just cut to the point, and I'll show you how to do this. But 134 is my upside target in NVIDIA by March 1st. I want to erase everything. Let me do it over here. I'll just do it over this 60-minute chart. Log on, yes. And intraday, 195, okay. All right. So what we do for time is you want to look for the most recent. You want to look for the most recent purple or blue up to a recent blue. So you're looking for down. Okay, so up, down, and then you look for another one up. So you're drawing fib time extensions. So we're going to go from the low up to the blue dot, back down to the correction. And typically what I like to do is you take the distance in the most recent trend swing and you go out to the 1618 time projection. So for this ongoing trend swing, which is happening in NVIDIA, we should get out to March 1st. Before March 1st, we should get up to the fib projection as I showed you at 134. Throw another symbol at me and I'll take a look at it. Yes, I do use volatility. That's why I have credit spreads all over the place because we're in the 62nd percentile. Applied volatility is very high right now. We are heading into earnings in NVIDIA. It's very high. IIVI. What's going on here? IIVI. Kind of a funky stock, isn't it? You're not going to find a setup in every chart. What I need to do is let this correction mature a little bit. And once you get a few more bars off the top, I would go from the low to high, back down. When you start to think the correction's over, I don't think it's over yet. Traditionally, I don't trade less than a 38% pullback. And a 38% pullback is not going to come into 34.13. So until it gets down there, I won't do the projection. But if and when it gets down to that point, you take the most recent swing wave low to high, and then you go fib time extensions, you go that distance. Wherever you start to think the correction is bottom, let's say we bottom here on February 22nd, I want to find a quality, which is March 23rd, and then I like to do options out to the 1618 time projection, which is right there. So that's just a short, quick way, the way I pick out, just a short, handy way to pick out proper expiration. Okay? And again, you're not going to find a setup in every trade, every market. I'm looking for good quality setups. Okay, so don't don't try to find it everywhere. All right, gold. And I'll finish up after that. Okay. So gold's a good one. All right, so we just actually moved into an uptrend. Just moved into an uptrend. On the majority, though, we've been in a downtrend. So what I'm interested in is blue dot to blue dot counter trend correction off the low. And look where we're double topping. Distance of this correction is equal to this correction at this double top. Then we'll go drawings, retracements. So you go blue dot high down to the low. And we're also at the 50% price retracement. There's two key zones of resistance in gold. 100% projection of this swing, 50% retracement of that swing. So 1224 to 1232. And then right above that, look, minor power wave sell on top of 2 fib. If 1232 doesn't hold resistance in gold, then look for 1255. Okay, you have 3 potential zones. Okay, I wouldn't be short and just put a stop up at 1300. If you want to do an $85 stop in gold, that's fine. I would take it in 3 steps. Try it once, maybe get stopped out. Try it a second time, maybe get stopped out. But one of these is likely to hold. If it doesn't, okay, then the trade just doesn't work. We're very low implied volatility in the 8th percentile, so I'd be doing kind of out of the money put debit spreads. Buy like a 1200, 1180 put debit spread. If you start to get a candlestick reversal against that zone, and that's exactly what I would do in gold. I'll take 50%. I know it's not a fib level, Don, but half back is something that a lot of people watch. So I'll keep an eye, though I know it's not fib, though. And sorry, Don, I don't know if you want me to do gold or gold futures. It's very similar. Gold actually looks like a better setup than Rand Gold. I don't know. Let me know. Did you want the stock or the metal? Wells Fargo. Not really seeing a setup there. Kind of up, all right. All right, so here's a setup that I like. So when you get kind of this ABC pattern, so down, up, and then down, try to find, and I didn't get to teach, oh, shoot, I didn't get to do this yet with you, but you can do projections of correction to correction, and you can also do, let me just change these colors. You can also do little trend swing compared to trend swing. So I'm going to do a projection of this little swing, back up, and then you're looking for clustering. Now you can also do a retracement of the most recent level, but there's a pretty thick zone here in Wells Fargo from 100 down to right there. And then let me get rid of everything else, keep it simple. And let's do a retracement off the most recent blue dot low, which is going to be right here, up to the high, and you're looking for the question. In fact, I will be watching this zone. That's a sweet zone at Wells Fargo for tomorrow. That's really good, actually. 55.50 to 54.47. Volatility is low. Earnings already out. Dividends out. So, looking for a bounce right in that zone. That's actually a really good setup. I'll be watching that one tomorrow. Thank you for that. Okay, let me just check. Are we at the 25 mark yet? Let me just see how we're doing for sales. Again, it's tradinganalysis.com/get, GET. Worth over $1,000. You're getting it for $200. You can start taking the course tonight if you're interested. We're doing live trading next Thursday. And I answer emails, questions, anything. There's a lot of content for you to get in there. So definitely check it out. The feedback's been very, very good. I forgot to do this part. We have feedback. This is from last year's course. Phenomenal material. This is unsolicited. I didn't ask people for it, but phenomenal material and explanations. Best investment of time ever for options. Learn more than a few hours and waiting through several days of study. Much more to absorb from reviewing the archived recording. Thanks for investing your time and energy. Great call. Good stuff. Great class. Love it. A lot of insight. You're awesome. When I said I had my doubts earlier, I don't know how to find time extension and time projection and toss, but after attending your session, you cleared my doubt or inability. Best explanation of delta I've ever heard. Thank you. Got it. Making the Greeks make sense. Not complicated. Light bulb moment. Got it now. Awesome stuff. Really enjoying this. This is awesome to the man. That's all right. Just copied and pasted from the text writing and didn't even ask people to do it. So good feedback. Okay. So that's that. Let me just check. Oh, the other thing is people are asking about the distillery. So this is it. If you're interested, it's upstatedistilling.com. So upstatedistilling.com. We're good. We've got a vodka out. We've got a whiskey. We've got a bourbon and rye. We've got a rye and a blended whiskey. The bourbon is coming out in like April. I had a track season in Saratoga. This is it. I did the website. Probably shouldn't have. Just thought I'd try to do it. This is the new whiskey that's out. Location, it's in Saratoga, New York. A team. I'm the marketing director. This is Ryan. He's my partner. He's the majority owner. This is a girl we hired out of school. That's me. So is my other job. It's kind of fun. All right. That is the offer, guys. Let's see how we're doing. Of the 25, how many spots do we have left? Sales total. Today's what? Second. It's my birthday. Second. Third. Oh, halfway there, guys. 12 spots done. We got 13 to go. All right, so that is the offer, tradinganalysis.com/get. I hope you guys appreciate the power of fib. I hope you guys, maybe I cleared up some of the kind of the voodoo aspect of it. I know it's a little bit different, a lot more work than you're used to doing, but I think when you combine it with candlesticks, it's very powerful. So hope I maybe cleared up some confusion about fib and options, show you my take on the markets. I appreciate your time. Thanks to Steve and everyone that at the Candlestick Forum. Willow is a master in the business, and now our companies work closely together. So thanks for having me, and happy Friday here a little bit, and happy Super Bowl. And boy, you guys are going to be fired up. Don, yes. Automating alerts at Confluence. Yes, it's actually in the works. Actually, I have it done, believe it or not. Yeah. Thanks, Clint. Appreciate that. Yep. It will be, it's happening actually, Don. All right, guys, thanks. Appreciate the time, and I'll see you soon, all right? Take care.
Todd, thank you very much. Everybody, this is good stuff. So this is well worth your money. This is stuff that you're going to be able to apply to your trading from here on in. So I would take advantage of it. That's a lot of information for less than a month's worth of Starbucks. So, Todd, thank you. Good stuff. We'll be up early to watch you sparkle on CNBC tomorrow morning.
Thanks,
Thank
Steve.
you,
I
everybody.
appreciate it a lot.
All right.